All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is not only Monday, it's a new start of the month. So, ladies and gentlemen, we have a lot to talk about, and look, I'll try to fit everything into this webinar. So, by the way, this is a video preview for the webinar, which is going to happen in a few moments. So, do not tune out. Hopefully, you enjoy the session, and I'll see you in a bit. Alright, okay, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen. There we go. Let's get the voice started. Look, today's Monday. Today's the new start of June, and honestly, I think we're gonna have another roller coaster ride. I mean, honestly, I don't even think that we need to talk about this. I think every day is gonna be like a new roller coaster ride. Look, before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Hopefully you can hear me and see me well. Let me just put my usual good morning in the chat room. Good morning, everyone. There we go. So, ladies and gentlemen, so as always, this session is meant to kind of, have a little chill talk about what's happening in the market. If you have any questions, feel free to ask them because again, that's kind of the essence of everything. I mean, if you can of this show, because if you can ask questions, that's why we're doing it live. Feel free, honestly. That's it's always welcome. Doesn't matter. The question is, what if you think that maybe you're asking a stupid question? No, it's not. If it's bothering you, then if it's coming into your head, then it's not stupid. So it's like, look. Anyway, look, ladies and gentlemen. First of all, of course, yes, there is a disclaimer. We went through that one very quickly. Also, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's jump into Nikkei 225 first here. Of course, the index declined because, look, this morning, I came to work and I kind of saw the news again that China and US are right back at each other again. Yeah, that's not the most not the greatest thing that you want to hear on the Monday. If you're trading the markets, if you're, let's say, maybe into stocks, you're buying stocks, then yes, this is something not the thing that you want to kind of hear. But look, if you're missing the news, basically, China and US are kind of attacking each other again about the issue with the tariffs, that neither of the sides want to reach an agreement and all that stuff. So now the U.S. administration is kind of threatening to double the tariffs on steel and aluminum, as whatever you want to say, how you want to pronounce it, but aluminum imports, they want to put 50% on that, and effective June 4th. June 4th is Thursday, if I'm not mistaken. Yes. So China kind of responded with the same thing, that that the U.S. is breaching the agreement that was reached in Geneva. Look, again, it's like we're right back at each other again, and I said it before and I'll say it again. Whenever we have this moment of positivity, I said, look, guys, don't don't relax too much, because again, this will be on and off. And even if they would reach something, honestly, like even if they would sign something, I would probably still be so cautious about everything, because they will say, oh, you know what, you're breaching our agreement and blah blah blah. That's why that's it. We're done. So that's why I would prefer to right now. I would prefer to just kind of to play a cautious game here. Looking at Nikkei, you can see that we are are at this spot where, just a second, just wanted to double check. Oh, no, wrong file. We're at this spot where we're seeing a little bit of a retracement, and we saw that a little retracement today, we held nicely above all the EMAs here on my daily chart, especially the 200 one. That's what I'm looking at. I'm loving this. I'm loving this kind of this hold up. Sorry, I mean I got distracted by something else. Look, one thing for sure with Nikkei, we're getting a nice hold up here, so there is still room for opportunities for the upside. So as long as we stay above all these EMAs, look, I mean, we could see a break of the 200 or something like that. So for me, the somewhat of a good zone is this. I mean, if we remain somewhere above this 36,000 kind of 600 zone-ish. If we stay above that, great, I will remain somewhat positive. Ideally, don't get me wrong, ideally I would prefer to see the index remaining above the 37,850 zone. You know what? Actually, let's do it this way. Let's reiterate that. Let's remain, if we do stay somewhere above the 36,850 zone here, I will continue targeting the upside, because as I said to you last week and the week before this, I mean, I said to you that, look, I am still somewhat positive, because I'm really curious to see if this is not going to end up being something of a something of an inverted head and shoulders pattern. If that's the case, then, ladies and gentlemen, then we're kind of, destined maybe for a breakout here to the upside. However, let's not rush into things, okay? I mean, still, if we are considering this to be an inverted head and shoulders pattern, then we would need to see a break of the neckline. The neckline is kind of this upside line, which is acting as a good area, was acting as a good area of support previously up until maybe the end of February, but then it kind of broke it, and now it's acting as a good area of resistance. So if we can clear this area, and we can also clear the 38,500 zone right there, then yes, great. I will consider some higher areas. So at this point, just to kind of sum up everything, we are currently resting near my EMAs here on the daily chart, the 200, the 100, and the 50. So if we continue to trade somewhere around here without dropping below the 36,850 zone, then great. I will still, like I said, I'm still aiming for the upside. But if we start falling below this, I'm taking a little bit of a pause. I'm not saying that I'm going to get very bearish, no, because because this 36,000 becomes, my voice is going down. This 36,000 becomes quite an important area to watch. And if that one gets cleared, now that's where the bummer comes in, because that's when more bears could jump in. Those who are doing technical analysis, those guys could start jumping in here, and those bears could start jumping in here and pushing this index lower. So look, there's a lot of ifs, of course, don't get me wrong, but we are near a key important area of support. So like I said, I think we are at this moment where, yes, these trade tariffs are kind of the subject number one. However, now as we move further along the way, we see that everything is kind of adjustable in a way, or like agreeable. We can fix it in a way. So what I mean by that is that, let's say they come out with some extraordinary tariffs, threats, and all that stuff. The market gets shaken a little bit. Everybody starts panicking, like, oh my god. But then everybody kind of, now I think we're at this point, we all understand that if you're gonna drop the market, if you're gonna cause some like market sell-off because of your threats, I mean, that's gonna be like bad publicity. I understand, the bad publicity is actually good publicity, right? So any publicity is good publicity, but not in this case, in my opinion, because if you're gonna, like I said, if they're gonna drop the market really hard, and I mean, you're gonna just lose at the beginning of your term, you're gonna lose your credibility, your respect in a way. So that's what I'm saying. So that's why they're trying to be very careful with this, and that's why I think the market is getting slowly immune to the whole situation with the tariffs, because as long if you're getting an occasional threat here and there, that's fine. Because we understand that there will be something along the way, and maybe in a week's time, or maybe even better, in a few days' time, something will come up where they will say, oh, you know what, okay, we'll scrap that because we reached an agreement and all that stuff. So that's what I'm saying. So that's where the interesting moment comes in, and I think that the market participants so far are starting to understand that. Okay, let's see how that's going to play out. Of course, either way, I don't care. For me, at this point, looking at Nikkei, I need to see a clearance of that 38,500 zone. While we're trading in here somewhere, I'm just observing the price action. Speaking of China, looking at this one from the so I think China is closed today. Yes, let me just double check very quickly. Yes, the Duanwu Festival. So yes, please apology all the Chinese viewers here. Please apology. My sincere apology in terms of the pronunciation. Hopefully, hopefully I'm reading this correctly, Duanwu. But hey, look. For now, the same story, like I said, applies on China 50 here. I'm just going to briefly mention this one. Either way, I think that the easiest option for me here to start looking at some higher levels is on a push above the 13,800 zone, and then we can go from there. For now, there is still room for some downside, maybe towards this 13,000 territory, somewhere around here, maybe just a little bit above that. We have the 200-day EMA, and this is something that I will be keeping a close eye on. I'm going to keep an eye on this 200-day EMA, this 13,000 zone, and then we'll go from there. Jumping into Australian index. So look, last week we made this new high, and we are currently kind of struggling still. So look, I think that it's quite logical that we need to see a clearance of this current, or sorry, not current, it's already like past month. So the highest point of May, which is around the 8,455. If we can get that nice clearance, great, more buyers could join in. Oh, by the way, where's my list of all these banks? There we go. So basically, I forgot to mention that when I was talking about Nikkei, keep your eyes on the BOJ. That's coming out on the 17th of June, the interest rate decision. And let me just actually jump into that very quickly. So the 17th of June, there we go. That's going to be Tuesday, and that is the interest rate decision. So what to expect here? Basically, the BOJ is at a very interesting spot because inflation did pick up, and inflation it's starting to push higher. I mean, you're in this little dilemma right now that you need to kind of hike rates, and in a way, if you're going to hike rates to control inflation, well, guess what could happen with the with this index. And that's why, look, that's why I'm kind of still somewhat positive. I think kind of the market could be enjoying the moment, kind of enjoying the the dance before the interest rate decision, because again, it's going to be very difficult to understand what kind of market reaction are we going to get. I mean, if we do come out with the higher interest rates, and where's that? Let me just double check very quickly. So the June one, I mean, at the moment the forecast kind of sits at the same level, and this is, like I said, this is where the beautiful thing comes in. So that's why I'm kind of leaning still a little bit more to the upside. So of course, we don't really have like a projection, but it seems that maybe the interest rate hike could happen in July, not in June. And maybe for June, they will still keep it as it is, because of course, I will jump in later into all this Japanese yen related stuff, but so far the Japanese yen has been on the stronger side. So I think that at the moment they're trying to keep this balance where they don't need to kind of strengthen the Japanese yen yet. They want to keep this kind of card for later, and that's why they might not go for the interest rate increase this time, despite the inflation picking up again. So that's where, like I said, that's why the interesting bit is, and that's why the stock market could continue kind of pushing higher a little bit, and maybe up until July or something like that. But again, that's just the theory, that's just the thought. Of course, there's a lot of ifs involved along the way there, but of course, we're analysts and we're trying to kind of make some sort of logic here and trying to understand what could happen next. So that's what I'm saying. That's why I forgot to mention the BOJ, but this is quite important. And like I said, the interest rate decision is coming up. Yeah, keep your eyes on that one. Yes, inflation is picking up in Japan. They need to go and hike rates, and I'm talking about BOJ. But during this session, this June session, I really don't know if they're going to do that. So let's not rush into things. For now, let's keep an eye on this and keep an eye on the global market. So yes, with Australia, like I said, this is it's kind of, like I said, pretty straightforward in a way. For the downside, for the downside, I would prefer actually to wait for maybe a drop somewhere below this territory, this 8,000 kind of 395 zone, and then I'll go for a larger correction to the downside because. Look, in general, I would like to see a little correction here on ASX 200, but I do understand that we're not far from the all-time high, so might as well kind of hit that, and then kind of correct back down, because this, honestly, this is, wow, this, like, without any strong declines since the beginning of April, not very exciting to jump into buys here. However, if you're trying to capture this move towards the all-time high, maybe that could happen. So, but again, I'm not saying that this will be the case, that we will start moving towards the all-time high straight away. No, but again, there is a great chance of seeing that. Dow Jones Industrial Average. Now, look, I'm watching, the market's closed, of course. The cash index right now is drifting a little bit to the downside because, again, we are seeing this negativity kicking in a little bit because of U.S. and China, firing shots at each other again. And that's why there's a little bit of weakness. But again, we still remain above all the EMAs on my daily chart, so that's good. I talked a lot about this last week, so I said that as long as we stay above all these EMAs, I'm going to continue targeting the upside. If we start breaking those, then I'll consider a move towards the 40,000, kind of 800, 600, something like that, this zone right there. And then we'll go from there. But again, for now, I'm still cautiously bullish. For me to get a little bit more excited with the upside scenario, I would like to wait for a push above the 42,900 territory, somewhere around here. And if we can get that move, amazing. I will consider some higher levels. Because then we could actually see a kind of a confirmation here of a break of the neckline, because again, we also have like something of an inverted head and shoulders pattern here, a little bit of a complex one, but nevertheless a possible inverted head and shoulders with the neckline being somewhere around here. Like I said, if we can clear this 42,900, wonderful. I'll consider some higher areas. The S&P 500, similar story. We're still trying to hold here, but look, I think this steep upside line no longer needed. I think that it's better just to keep an eye on the on this little range here. This range is roughly between the 5,787 and the 5,967 levels. And if you're looking for some higher areas, then yes, of course, wait for a confirmation break here above the 5,969 zone, and then we'll go from there. For the downside, I would like to see a drop below this territory, below this 5,787 territory zone, and then we could go from there. A nice good drop below these EMAs as well. We get great, more sellers here could join in. Look, for now, it's like I said, while we remain in this little kind of range area, I'm just observing the price action. I'm not really touching anything here because, again, it could become a little bit too tricky, because I think that at the moment we'll be getting these, like, back and forth shots from both of the sides, and that's why just I don't know, like I think we're just gonna observe, or we rather observe until we stay in this little territory. Nasdaq 100. Let's have a look at this one. After a good start, after a good rally last week, a push above the 21,000 kind of 483 territory here. Basically, we cleared the 21,500 zone. We kind of drifted back below it, and we stayed below it. So look, this high, this 21,611 zone, is the highest point of May. And if you're looking for some higher levels, then of course a break above that barrier is required. If we can get that move, amazing. I will consider some some higher areas, and I will actually consider a move towards the current all-time high, which is around the 22,222 zone. That's on the main index here, so not the cash or futures or anything. So yes, if we can clear this highest point of May, I'll go to the upside. But at the moment, yes, we're seeing a little bit of weakness. Look, with the situation with the unlike with the S&P, where we're sitting in a kind of like a range here a little bit, with this one we're kind of sitting something of in a rising channel or something like that. Let me just double check here very quickly. Yeah, could be quite an option, to be honest. So yes, so this rising channel, yep, I would say we could continue targeting the upside. This upside line no longer needed. There we go. We're tidying up our chart. So if we clear the upper side of the rising channel, then great. Okay, I'll go for that all-time high near, which was reached back in February of this year. And then we'll go from there. For the downside, pretty straightforward then. Like I said, this is where our formations are helping us out. So a nice good drop below the lower side of this rising channel could attract a few more sellers. We could aim for my EMAs right there, and then we could go from there. So long story short, I think that for now at this point, just allow it to walk here a little bit until we get some better news or something like that. By the way, NVIDIA, let's have a look at NVIDIA, what's happening there. Yeah, I didn't feel the love on Friday. Look at this, boom, drifted back down. Okay, interesting. Let's see how this is going to play out, and maybe we'll see some action here, up and down. Again, I don't want to say anything yet. Let's see what's going to happen first. Let's see if we can maybe travel back to this 129 zone somewhere around here. Maybe we'll get a little hold up. Maybe then it'll rebound back up, and then maybe we'll see a head and shoulders pattern. I don't know, but like I said, with this one, I really don't want to do this technical analysis yet. DXY dollar index. So, ladies and gentlemen, okay, we're seeing a drift lower on the dollar index, and it's not feeling the love here. We're approaching now key area of support, 98.70 zone. If we get a nice clearance of that one, then great. I will consider a move lower. But this week, ladies and gentlemen, this week we'll have a busy one, starting off from today. Because today we're getting the ISM. Where's that? No, that's the wrong week. There we go. Today we're getting the ISM manufacturing PMI figure right there, and look, the expectation is for a higher number. Great, from 48.7 to 49.5. Wonderful, no questions asked. However, one question is asked. Third month in a row, in that case, being in contraction territory, well, that's not very good, and that's where, like I said, the weakness in the US dollar could remain. This is where we could see further action to the downside, because again, if the numbers come out on the lower side, if manufacturing PMI comes out on the lower side, this is putting pressure on Mr. Powell. Why? Because okay, I'll start off from Friday, from last week's Friday. We got the PCE. We got the US PCE number, which came out on the lower side. The core one as well came out on the lower side right there, as you can see. So not only the CPIs came out on the lower side, the PCE came out on the lower side. If ISM manufacturing PMI comes out on the lower side, it is just putting pressure on Powell, because again, he's under pressure from one person who really wants to see lower rates and keeps calling Mr. Powell names. Okay, look. Fair enough. You want that. That's great. You want to boost spending somewhere else. Okay, understandable. And that's where the whole pressure is coming out from. And this is, like I said, and that's why Powell is kind of worried what's going to happen here. Oh, why is it not loading? Refresh. So he's worried what's going to happen, in June. Well, in June they're expecting to keep the rates unchanged. That's fine. But going further, July the percentage remains the same as previous. However, if ISM drops, then I think that this will slowly start dropping here. This column. Because by the end of this year, we're expecting 2 cuts. So if you're not doing those in June or July, then you have kind of 3 more meetings left after that: September, October, and December. So maybe in December we could see a cut. Maybe in October we could see a cut. So yeah, like I said, but at the moment I think that the central bank, the Fed, will keep the rates unchanged. However, he will probably get Jerome Powell will get scrutiny, but I think that that's the price he's willing to take at the moment, because inflation remains on the somewhat on the lower side, still within targets, but I think that could start picking up going further. So again, let's not rush into things. And looking at DXY, yes, like I said, I'm kind of leaning a little bit more towards the downside given everything what's happening. By the way, everything what I'm mentioning right now about the Fed, and the reason I'm doing that, because on the 18th, don't forget that on the 18th, we're getting the interest rate decision. So keep that in mind, ladies and gentlemen. Let's jump into the German index DAX. There we go. Okay, looking good. So trying to make our way back above the 24,000 zone. We're kind of battling down right now, struggling to push above the 24,000 zone. But okay, let's keep an eye on this. Again, like I said, in general, you should see like bigger problems here. We should see like a decline. But this is what I was talking about in the beginning of this video, that the market is slowly getting immune to all these tariff threats, because I guess again we discuss tariffs, we see those coming through, and then after a few days or maybe a week or 2, they get like abandoned or maybe something gets reached, and everybody's back to normal basically. So so initially, basically the whole point of these announcements of these tariffs is kind of to threaten, so that leaders of other countries would start kind of pouring or traveling to the carpet in the White House to discuss these, to renegotiate or something, to get just a favorable deal. Although the U.S. has been benefiting from the current trade, with the previous trade policies in a way, because again the country is a very consumer orientated country, and you have a lot of consumption, and you cannot produce everything inside the country. So that's why these other countries come in, and you need to get those goods from somewhere, otherwise everything's going to be way too expensive. So it's a consumer economy, and it needs cheaper goods, you want it or not, unless you change the mentality of the whole nation. Maybe that's the goal right now. Again, it's just like I said, it's all debatable. Anyway, so coming back to the situation here with the German index DAX, look, in general, we're not doing bad. We're 20% up for the year after a decline, where we declined here after wiping out all the gains. We were like around 17% here. It was already classed as a good result in the beginning of this year. Then we dropped into -7 territory for the year, and now we're recovering everything and gaining around 20%. I mean, talk about a roller coaster ride, honestly. But this is interesting, to be honest. This is very interesting. The ECB. The ECB, we are getting the ECB on Thursday, if I'm not mistaken. So yes, interest rate decision, ladies and gentlemen, keep your eyes on that. Minus 25 basis points. That's what we're expecting. And again, maybe that's when the stock market could rally a little bit more. But I mean, if you're wondering where more, well, 25,000 is a level, is it? Yes, it is. So 25,000 looks attractive, looks like a psychological level, so why not, right? But I'm not saying that we're going to go there, no, but there's a lot of criteria that has to be met first. But one of the criteria for me is to wait for a push above the 24,326 territory, and then we'll go from there. And looking at the FTSE 100 here, we're stuck, as I told you last week. While we were in this little range, I'm just observing the price action, not really doing anything with it. Now then, let's jump into the commodity world. Let's have a look what's happening. Of course, gold is popping higher. Look at this. First of all, I want to say that this 3,285 territory held nicely. It has been a good area of support. We had a few breaks here and there. Amazing, wonderful. But in general, the holdup happened, so we had these false breakouts, but that's fine. That's part of the game. And what I said to you last week, that look, I mean, while we remain inside the channel, we will continue examining kind of the downside scenario. However, also I've mentioned this in my previous sessions that look, we look at the prevailing trend. There was a falling channel, correct? We're looking at the prevailing trend. The prevailing trend was to the upside, so there is a greater chance for this one to break out higher. There we go, we're breaking out higher. But look, for now, I'm not rushing into things. Of course, great that we're seeing this this violation of the upper side of the falling channel. Amazing, wonderful. However, keep your eyes on this little, let me just grab the line. Keep your eyes on this little obstacle right here, this 3,360 kind of 6 zone, 3366. Keep your eyes on that one. If we can clear it easily, wonderful. A forthcoming higher high will be confirmed. This rally here, this up move, is kind of sparked by the renewed tensions between US and China, of course. So yeah, nothing new, to be honest. But for me, what I'm doing here is I'm aiming for this territory for now. This kind of area around the 3,430, maybe 40-ish. So I'm going to aim for this zone first, and then I'll take it from there. Yes, it's not the all-time high. The all-time high is around here. Let me just put it on the chart here. There we go. 3,500. That's a level that everybody's kind of watching. And but like I said, I don't want to rush into things, and I'm aiming for the 3,430 and 40 zone, somewhere around there, and then we'll take it from there. But of course, 3366 is the level to watch for in the short run. A break of it would confirm a forthcoming higher high. Let's jump into silver. Silver is also trying to make its way back up. Beautiful, so far so good. Very technical. Nothing to add here. This upside line. If you watched my sessions last week, basically I said that look, while we remain inside this. While we remain above this upside line, there is a good chance for this one to push higher, but a confirmation break above this 33.68 zone is required. If we can get that move, amazing, more buyers could join in. Yeah, pretty much so far so good. Let's jump into oil. There we go, pushing back to the upside. And okay, with oil, I am still somewhat bearish. However, if I start seeing some confirmation breakouts to the upside, then I will consider a little bit of a move higher. But again, at this point, I'm not rushing into things. Somebody might say, hey, Darius, but what about a possible inverted head and shoulders pattern? Well, look, I mean, yeah, could be the case. Sure, why not? You know, like we can, but either way, confirmation break is still needed. So for now, I'm watching that 50-day EMA. I'm watching this little short-term downside resistance line taken from the high of the 23rd of April, and we'll go from there. So if we can get that nice clearance, and we can get that clearance of the 50-day EMA, amazing, wonderful. More buyers here could join in, and we could target the 100-day EMA, which could be roughly around that $65 mark, and then we'll go from there. But again, like I said, this is in terms of the upside. For now, there is still a good chance for this one to drift back down, but we need a confirmation drop below the $60 mark here. If we can get that nice drop below the $60, then wonderful. I will consider a move towards the this upside line taken from the low the 9th of April. Natural gas, ladies and gentlemen. Okay, it's a mess, and while we remain in this kind of ascending triangle pattern, I'm just observing the price action. While we're inside of it, like I said, I need a confirmation break here, either above this barrier, this the 3.84, or I need to see a break of this upside line, and then we'll take it from there. Platinum, very quickly, drifting back down a little bit. So I covered this last week and I said that, look, we had a nice blast here through that 1000 zone. Great, wonderful. We traveled higher. We reached some key areas of resistance, like for example this 1000 kind of 100 zone. Almost we reached that one, and we started drifting back down a little bit. So again, we're, like I said, we're at an interesting spot here. We're getting a hold of near this 1055 zone. If we can rebound from here, and then yeah, I'll continue targeting the upside. Very quickly on coffee, let me just double check coffee here. I think it's this one that I'm looking at. Wait just a sec. No, it's this one. So yes, looking at coffee futures, continue to slide towards the 200-day EMA. Okay, that's absolutely fine. I think that this is what I'm gonna do and what I'm gonna stick to. But yeah, this upside line is also somewhat of a target here, and then we'll go from there. Very quickly on corn futures, we're at a very interesting spot right here yourselves. And ladies and gentlemen, if you're following technical analysis, then we're seeing somewhat of a descending triangle pattern. Such patterns tend to break to the downside. However, confirmation break is needed, and the confirmation is basically from here, from this drop right there, and then we'll go from here, ladies and gentlemen. Sure. Drifting lower, that's fine. So far so good. We're trying to find some support here, but so far it is struggling. So okay, maybe this could be a good one, the $17 mark, but let's not rush into things. AUDUSD, let's jump into Forex again, ladies and gentlemen. So we're holding above all my EMAs. So apart from all these levels, we're holding above all my EMAs on the daily chart. So for now, if you're looking for some higher levels, I think that once again, we need to keep an eye on that 0.6515 zone. Yes, we had an overshoot here, but we failed to stay above it. So we need that clearance again. We need to see that body of the daily candle remaining above this area, and then we'll go from there. For the downside, pretty straightforward. The drop below all my EMAs could do the trick here for a few more sellers, and we could then, yeah, take it from there. Let's jump into AUDJPY. Let's see how our risk on, risk off monitor is doing. And there we go. You can see that there is logic. So basically, this pair is considered somewhat of a risk on, risk off monitor, and basically, if monitoring the state of the economy. Whenever it's pushing higher, markets are doing well. The equity world is doing well because we have risk currencies such as AUD and NZD and Japanese yen, which is a safe haven when the markets go down. Everybody jumps into the Japanese yen. So far, we have been seeing some strength, some weakness, on the Japanese yen front, but it's still holding. Looking at this AUDJPY, it's still holding above my downside line. So in a way, I'm gonna continue targeting the upside as long as we stay above the 91.86 zone. If we start falling below it, I'm gonna consider a move to the downside. USDJPY, like I said, I briefly touched on it already in the beginning of this video. So the BOJ is at a difficult spot, and they are trying to figure out what they want to do. They want to hike, they want to not hike. Most likely they're not going to hike, but they're really strongly considering that potential hike at some point, but I think that might happen more in July. At this point, I think that the Japanese yen could actually weaken again, but that's only if the US dollar gets stronger. But at the moment, we're not seeing that. So in a way, I think the Japanese yen could enjoy the moment if we see once again threats of tariffs, and there's not going to be like a deal reached or anything. But if there will be a deal reached, as I keep on saying, that the market is already getting used to that, then we could see USDJPY pushing back to the upside here, not because maybe of the stronger dollar, but mainly of the kind of weakness in the Japanese yen. USDCAD very quickly. So by the way, BOC coming out on on Wednesday. The BOC, the Bank of Canada, is coming out with an interest rate decision on Wednesday, and we are not expected to see any cuts so far. I mean, it would be like for how many actual forecast. Wait. Looking at the wrong one. I am looking at the wrong one here. Let me just double check here very quickly. So basically, we have been cutting rates all the way up until March meeting, and then during the April meeting we stopped. So we didn't do any cuts here. We just kept it at 2.27, 2.75. And the same story is right now expected. We are expected to see 2.75 in this June meeting, which will happen on the 4th of June, ladies and gentlemen. Check out your economic calendars for that. So in a way, that means that we could see some strength here further in the Canadian dollar. Not because, like I said, because the bank is going to consider not cutting. So not because we're expecting a hike or something like that. No, because at the moment the driving force is the weaker dollar and the fact that the BOC is not cutting, and that's why the currency is becoming stronger. Of course, it's great for the consumer. However, it is not very good for business in a way, because for international trade, if you want to say it this way. So because when your currency gets a little bit more expensive, let's say if US is the main purchaser of Canadian goods, then Canadian goods are more expensive for the US consumer. So why, right? So at the moment, I think that this is one of the strategies maybe of the White House to kind of drop the US dollar a little bit further in order to damage the exports of other countries. Again, maybe, I don't know. But so for now, I think that yes, further declines are possible here on USDCAD. So keep your eyes on that one. So yes, there we go. USDCHF. Now this one I like. It's just a copy of DXY in a way, the US dollar index, and we're forming or maybe already formed something of an a head and shoulders pattern. So yeah, look, I mean, we're currently breaking below the 0.8193 territory. So if we can stay below that, I'm going to continue targeting the downside. Don't forget that on the 19th of June, we're getting the SNB interest rate decision, the Swiss National Bank. And let me just double check very quickly. I think that they're expected to cut again. Yeah, from plus 0.25 to 0. Yeah, that's what they're expected to do. So of course, if that's the case, then it's not going to provide more strength for the Swiss franc. Maybe actually we could see a drift lower here, all the way up until the 19th of June, and then it will stall here, maybe form something of a double bottom here, and then kind of rebound back up. So in other words, long story short, let me just grab this arrow here, and this is what I'm going to do. So this is what I will do here, and then we'll go from there. So that's my idea here on USDCHF. Let's very quickly have a look at euro dollar. Euro dollar is looking good, pushing higher, breaking above the 1.1425 zone, or sorry, it's approaching the 1.1425. Let's see if we can clear that one. I said to you before, and I'll say again, I'm somewhat positive still on Euro USD for now. But again, let's not forget that the ECB interest rate decision is coming up, and we are expecting to see a interest rate cut by 25 basis points, which might not be the best option for the euro. However, that's why maybe they will try to rally all the way up until Thursday, and then we'll see. EUROJPY, just a very quick update. Okay, yeah, it's a little bit of a mess. So look, ladies and gentlemen, whatever. If you have any questions about any instrument, just drop it in the chat box. I will try to answer that question. So for now, like I said, with the EUROJPY, if I want to go for some lower levels, to be honest, a drop below all my EMAs is required. GBPUSD, yes, beautiful rebound from this territory, this 1.3444 zone right here. And yeah, so far so good. We're drifting nicely to the upside. We're continuing to aim higher. And yeah, look, I mean, I cannot add anything else apart from the fact that I'm aiming for that May all time, the highest point of May, which is near this area right here, the 1.3593. If we can clear that, a forthcoming higher high will be confirmed. And finally, ladies and gentlemen, for the ZERG, Bitcoin still holding on, still holding on. Look, I talked about this last week. In the beginning of this week, I said to you that if you're, you know, this is what I was targeting, this 111.12 zone. We hit that beautifully. That was the 61.8 on the Fibonacci extension, which is drawn from the lowest point of August of 2024 to the highest point of January of 2025 and to the lowest point of April of 2025. So worked out like a charm. The next target in general is the 121.22 zone near the 78.6. So for that one, I would prefer to wait for a push above this area, above this 112 territory. If we can get that move, if we can clear the current all-time high, wonderful. It opens the door to some higher areas. Bitcoin Cash. So this one's still holding on, but still a mess. I think this upside line no longer needed. We remain above. If we continue to trade above all these EMAs, then yes, I will continue aiming for the upside. For the downside, a drop below all my EMAs is required in order to go lower. Ethereum very quickly, still looks a little bit more bearish, but still holding on, still above the 200-day EMA. So, and to be honest, it looks like a flag. It almost looks like a bullish flag, especially on the weekly chart here. So yeah, it's really looking attractive. But the thing is that what I'm expecting here is to see a strong drop lower, maybe a test of my 50 and the 100-day EMA, and then maybe a test of this upside line taken from the low the 9th of April, and then a rebound and push back up. Look, either way, a break of this 2,737 territory for me is needed. XRPUSD, so Ripple, beautiful test of the 200-day EMA, mission accomplished. If I'm looking for some lower levels, then a drop below that 200-day EMA is required. At the moment, I just don't want to rush into things. I'm continuing to observe the price action. Especially, I'm gonna get a little bit more positive with the upside especially if we push back above all my EMAs here on the daily chart. Litecoin, okay, this is what I was talking about. So this is what the one of those scenarios where, you know, you're forming a falling channel, you're looking at the prevailing trend is to the upside, you're thinking, great, it should break out higher. But this is why I keep on saying, wait for the breakout. Because you can get these things, and this is annoying very, very much. And look at this 83.30 zone provided fantastic support. Look at this. I mean, so that means we can keep an eye on it. If we do drop below it, I'm gonna go lower. For now, the upside scenario is only on a break above this downside line and above my EMAs right there. Dogecoin, very quickly, similar story, dropped. We are now below all the EMAs on the daily chart, so I'm going to continue targeting the downside. Polkadot, similar story, had a nice decline here. You know, we're bouncing around that 4 zone, so this 3.82 zone is quite an attractive area of support near the lowest point of May. And finally, Tron. Now, this one I do like for some reason, because it's acting as a currency pair. That's great. So yes, we're seeing a nice hold up near my area here, near this whole highlighted zone, this 0.2615, 0.2667. So this kind of wide-ish support zone is doing a good job, and there we go, you can see this. So for now, I'm still cautiously bullish. However, a confirmation push above the 0.2822 zone is needed. Ladies and gentlemen, that is a wrap. That is a wrap, and I would like to thank everybody who was watching here, and I hope you found it useful. Ladies and gentlemen, as always, you know, you can feel free to leave comments. If you didn't leave a comment during the video, you can do it after the video when it's kind of posted as a recorded session. So yes, as always, ladies and gentlemen, I would like to thank you for participating. Look, I did not finish talking about the markets, of course. I mean, there's going to be plenty to talk about, and that's why we're having the session on Wednesday, 7 o'clock GMT time. So yes, do that, join in, and we'll go from there. As always, ladies and gentlemen, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you later. Bye-bye.